Good morning. My name is Leslie McFadden with Leslie McFadden Real Estate, and I have the honor of introducing our featured presenter this week, Tania McLaughlin with American Family Insurance. We had Tania answer 3 questions just so we can get to know her a little bit better. The first question is, what is the reason you get up in the morning? She says, my 1.5-year-old son Dax, because he's so excited to be awake and play. He's so cute. The second question, where did you grow up? Ravensdale, Washington. It's a small rural town that is now one of the fastest growing suburbs and highest ranked cities to live in Washington. She remembers it by its dirt roads, no street lights, and how all the kids were able to run wild until nightfall. That sounds like where I grew up. Third question, what was your favorite subject in high school? Math was her favorite subject. I would have guessed science, but there you go, math. Everyone, please join me in welcoming Tania McLaughlin.
Thank you, Leslie. Science was a runner-up. I had physics in there. Big nerd. So let me go ahead and share my screen. I have something else exciting to share with you guys today, which is going to be insurance. What I'm going to be talking about today, let me get into presentation mode so everyone can see that. I'll do a quick introduction. I know all of you on here know me. I'm Tania McLaughlin with McLaughlin and Associates of American Family Insurance. Been in the insurance industry for 13 years, the past 6 years as an owner of my own insurance business. And we have one major disruption going on in our industry right now that I would like to make sure that you guys as my partners are very fluent with, but the public, even after a year of this being out there, is still a little unsure of what this topic is about. So that's what I'm going to dedicate my time to today, is the Washington credit ban. So if you haven't heard about the Washington credit ban, who it impacts is anyone who owns a car or anyone who owns a house or lives in Washington. So if you have auto or property insurance, this has impacted your rate in the last year, because what happened is there was a temporary rule put in place by the insurance commissioner, the entity who makes the rules about how insurance rates are calculated. That was put in place, removing credit from insurance ratings. So really what that means is if you had strong credit, it's removing the discount that you get for having that strong credit, and vice versa. If you have weaker credit, it's removing the surcharge that you were getting for having that lower score. Now, credit has been a factor in insurance rates for a very long time. It's one of the primary factors, no matter which insurance company you're talking to. So this was a big disruptor. It caused rates to swing about 60% in either direction. So some people had maybe a 2% plus or minus, and other it was closer to 50 or 60. Now, the reason that this rule was put in place is it was a temporary emergency rule because COVID was going on at the time. And the insurance commissioner found credit to be discriminatory because people were going through things regards to COVID. What happened is that the normal process to make a rule like this normally takes years. You present it, it's approved, it's argued back and forth in the courts, and then eventually, if it is confirmed to be a rule, companies need to file rate and put that into their calculation. So it takes many years in order to do that. So one of the reasons that this was a disruptor, whether you agree with the credit ban or not, is just that it was implemented so quickly and in the midst of a pandemic. So that's what it is. Here's a quick visual of the timeline. So what I'd like to bring you guys to is that very beginning. It was March of 2021 that this was proposed. So exactly 1 year into the pandemic. And it was June of 2021 that it actually took effect. So I want to highlight that that's a 3-month turnaround. So that's what's very different for our industry and why it was such a disruptor, because this also has a trickle-down effect to industries like Leslie's and Tina's and mortgage and real estate when it comes to closing on loans and the amount of money that you have to have available for closing costs on a house and things like that. The other thing is when you look at that June 2021 was the new business effective date. So that's when insurance companies suddenly had to put this inside of their rate calculations. And every insurance company in Washington did this at kind of a different time. Now, it was argued behind the scenes. October of 2021, just a few months later, 5 months later, it was overturned in the court. The Superior Court said, this isn't a rule that we want to keep in place. We're going to pull that back because credit, again, is a very strong indicator in insurance premiums as to how we calculate risk and how we assign the right rate to the right risk. The permanent rule was adopted in February of 2022. Essentially what that means, to translate it, the emergency rule was overturned in October 2021. So the insurance commissioner proposed a permanent rule to take its place, and that took effect in February 2022. So the most common question I have about this is, it feels like a roller coaster. It's on again, it's off again. So can we expect this to be a quick turnaround and a disruptor in 2022 and 2023? The answer is that this emergency rule is what shortened the time frame. That's why we've seen the up and down, and that's now run its course. Now that this permanent rule has been adopted, it's going to be argued in the courts over the next couple years. So it has to go through due process. It's going to be some time before it's officially implemented and put back into rates. Now, in the meantime, 95% of insurance companies in Washington are putting credit back into their rating systems in the meantime, until that decision is made. That's the big announcement that I have today. As short as, I think it was about 1-2 weeks ago, that was officially announced at American Family Insurance that for new customers that will be included, credit will be included in the rate as of June, and August it will start happening for our current customers at their renewal. So the takeaway here is that the saga continues. In the meantime, there is something called adverse selection that may or may not happen for companies. So all that means is that if someone has 5 tickets and accidents on their record, and we're charging them less than we would someone who has a squeaky clean record, that means that we're not assigning the right rate to the right risk, and it's going to drive costs up for everyone over time. So that's what adverse selection means, and that is what we are at risk at, not having credit in the calculation, which is why you're seeing insurance companies rush to put this back in the meantime. As far as other things to consider, 2022 holds some unique things other than the credit ban. Number one, companies have had to take rate increases in the midst of this. So not just credit goes into insurance calculations, it's also rising costs of claims. It's whether they can include tracking your mileage versus having you verbally confirm your mileage. There are a lot of different things that go into it. One thing I can say is American Family Insurance has not had a rate increase since 2019. So proud to keep that aligned. There was a report that came out by the Seattle Times here recently that confirmed that the roads in Washington are now officially the deadliest they've been since 2006, which is disappointing to hear. I see a lot of nods. So, anecdotally, a lot of you understand that that is what's going on. Being in the industry, I would assume that if we went from hardly driving and most people staying working from home, that wouldn't be the case. But unfortunately, while the frequency of accidents have gone down, like the number of actual accidents that happen, say out there on 405, have in fact gone down, but the severity, the amount of money it's costing, the amount of downtime, the ripple effect that it has on people's finances, that is what has ballooned, and that's why it shot up to 2006 levels. Finally, we've all heard about inflation and the supply chain issues. It does impact auto claims, and it does impact home claims, and I'll get into more of that later. I know we're winding down on our time. One thing I'd like to leave you guys with is, in the midst of all this disruption and chaos, I heard a colleague talk recently about pressure versus stress. When you walk into your day and you have stress about what's going on, and especially something like personal finances and your risk plan, that's unhealthy. But when you have pressure, there is pressure, but you have a plan, you have a strategy, you have a little bit of control and how your day goes. That's what makes the difference. And that's what makes us more healthy when we're walking into change, because change is a constant. So you guys as professionals do have control. I would urge you to take action now, because timing really is everything. Quick takeaways for mortgage and real estate. If you can avoid giving a rate estimate, period, before you have a quote in hand with something like a 60% rate swing, positive or minus, I highly recommend that. On top of moving closing dates are a given, that could hugely impact the rate based on when the insurance company is putting credit back in. There could be a date switch to watch for. For financial advice, end of June, early July would be a great time for people to requote their portfolio because there will be a drastic difference in what their outlook looks like. For HR, this adds to the pain of employees. Not only is gas, cost of living higher, but insurance is going to be a piece of that. So if employers can reach out proactively and give good advice and have some reviews with their employees now to help mitigate it ahead of time, that wouldn't be a terrible thing to do. And finally, restoration and construction, making sure that if someone had to go solo through a claim recently, that they just get an agent. Or if they find out that they weren't covered, they were likely walking blindly into a situation they've never been through before. In my commercial, I gave some quick steps that we run through with everybody to give them a walkway to follow, and it doesn't seem so chaotic and so lost at sea when they're going through something like a claim. So finally, Tania McLaughlin with American Family Insurance, we're your team here locally.